Hello everyone, welcome back to CryptoCache. Thank you so much for joining me here. We're taking another look at Cocos, and just before we do, we'll look at Bitcoin, see what's going on there. Not a tremendous update for Bitcoin. It has tried to kind of fight back here. It is making higher highs and higher lows, essentially in the short term within the last few hours, but generally speaking, 60,000 is still a strong potential resistance level. So we're going to be stuck between 58 and 60,000 probably throughout the remainder of the weekend, and then I would say early next week, somewhere along the lines of either up or down based on how the whales want to perform. Right, we're going to see what happens. Keep an eye on that, but I think Monday, Tuesday we'll have a better perspective on where the market's going, just based on the reaction to this weekend's activity. All right, so take a look here at Cocos, and just before we do, also I'd like to just mention this: I'm not a financial advisor, right? But I do love trading, and I've been trading for over 15 years, and my goal is to help you become a better trader, right? So in that sense, I created this channel and a trading community with that purpose in place to help you become better in that sense, just because I truly love helping people financially, right? So check that out in your own time. Of course, I have a link in the description below for that. Rates are increasing next month, so I mean, definitely consider that, of course. But simply put, actually just I provide signals for every single trade that I take, and it's a really awesome experience, so you can kind of get the feel for what it's like to be trading with somebody that actually trades every single day for work, right? This is my job and I love doing it. So check that out. All right, so here's what's going on with Cocos. Hasn't changed much since I looked at it last, right? 12 hours ago, it was right down here, and now it's way up here. Just kidding. It's changed a lot, obviously. It's constantly evolving and constantly increasing in price, but just bear in mind, the higher it goes, the more likely it is to retrace and come back down, okay? So I just want you to be real. I want to be real with you for that. One thing to also note too, and if you're not familiar with the candlestick pattern, there is a candlestick pattern referred to as three white soldiers. So once this one-day candlestick closes, if it closes higher or just where it's at right now, for example, that'd be three white soldiers, right? And what that implies is the fact that the fourth day is commonly a red day. And that's just a normal way, a normal law of trading. It happens in all type of markets, for example. And the reason why it's forecasts a fourth day of trading is because it's overextended for too long, too quick, and it has to come back down. So just be prepared. Today might still be a green day, but the day after, the fourth candlestick, should be a red day. That's a very, very common characteristic. I would say it's like 70-80% likely. Okay. Now RSI, everything is just kind of out of the water right now. We don't need to look at the traditional indicators here. Even the simple moving averages are going to be far away. So we're not going to bother with those here today. We're just going to dive kind of right into some more specifics, kind of on the shorter time frame, because that's really all we have to work with. So we're going to look at the 1 hour chart and kind of get a perspective, see what's going on. And as we can see here, we're well above the Ichimoku cloud, right? Well, that's typically considered a buy signal, not necessarily to buy because it's above, but just in general, it gives you that confirmation that the price is trending in the right direction, right? And that's what we ultimately look for. Good traders are going to look for confirmation. They don't just buy a coin because they're concerned about missing out, right? Now, had you done that with this coin, it was probably still would have worked out, right? But regardless of that fact, that's just the general consensus, right? So what we're looking at here is, this conversion line hasn't come over here yet. Therefore, it's still considered to be an open position. We also have the baseline right here below the conversion line. So that's very, very important, because once this conversion line passes, then it's considered a sell signal and we want to get out. Okay, so we haven't seen that yet. So Ichimoku Cloud is kind of just giving us the go ahead to keep our positions open. All right, that is perfectly fine. Nothing wrong with that. One thing I forgot to jump into and take a look at, just really quick on the 4 hour chart, because I'm curious about this. Oh yeah, that's for sure overextended. Take a look at this. Overextended by far. So TD sequential, if you're new to that, or the channel just in general, TD sequential takes the current candlestick and evaluates if it's higher or lower than the fourth previous candlestick, essentially counting up to 9. Once you hit a 9, there's supposed to be a reset and or retracement that occurs afterwards. I would say sometimes there's a lag of somewhere in the range of 0 to 4 candles. So sometimes when you hit a 9, it's supposed to go sideways or retrace. But if you keep going past a 9, you're going to hit that standard deviation point, right, where the price gets too far out of whack and it has to come back down. We might be at that point right now. We'll look at the 15-minute chart to kind of identify that. But if you can see here, obviously we have the price moving right on up, and it hasn't even stopped at 9, right? So what you can see, though, of course, this is kind of nice. You can see this resistance level drawn out by Fibonacci retracement at 452. It spent a little bit of time right there. So I think I'm willing to guess we're going to see a lot of volume at that point. If we turn on the volume profile, and we can see that there was, okay, maybe not as much as I thought. We had a lot more volume down here, and it's just kind of jumping on up. So simply put, that does concern me a little bit because even though it spent a lot of time right there, we don't have a tremendous amount of volume right there, right? So that basically implies that that's not really a major support level, and the bottom could fall out in the big picture. Again, not saying that's going to happen, but if the price comes down, it may just blow right past that potential support level and keep going to the next major. Because again, you got to understand volume, where there's a lot of volume, there's oftentimes a strong support or resistance. That's what the volume profile tells us, that the volume weighted average price also does that too on a shorter time frame. In fact, we can look at that here next, but one last thing I want to show you is so here, let's go ahead and take a look at, no, you know what? We looked at TD sequential. We're at a 5 right now. Oh, you know what? Let's look at that really quick. Because look at this. If you can see back here, it got up to a 9, right? That's what's supposed to happen. The price is supposed to go sideways after a 9, but it just kept on going. You see how it stopped counting because it was just an extreme overtime. When you get these neon candles, that's basically telling you that we're reaching critical overload. We're getting maxed out. And that's where you see the standard deviation lines. So let's actually take a peek at that. So let's see if I can turn it on here. And I don't know if you can see that very well. I can just go ahead and remove this guy here. And if you can see, the price went way out of whack here, right? So with this candlestick coming up that far, it had to come back down because there's a standard deviation within the volume weighted average price. It tells us, hey, the price is way higher than where the volume should be. So in the last 24 hours, it takes the volume, expresses it as a price, and it pretty much tells us that the price should be within these lines, these parameters. It went too far, so it had to come back down, and that's why you saw this retracement. The 15-minute chart might be a better reflection of this. So take a look at this here. You can see that. That's pretty much telling us where this blue line here, that's where the price should be based on the amount of volume. But the price was tremendously higher. Look at this. This percent difference was upwards of 120%. That's only supposed to be 10 to 20% at all times. All right. So if you were to see something like that happen, then you need to ensure that you are taking precautions to consider selling your position, or trimming, for lack of better terms. So again, if you ever see that again moving forward, you're looking at, hey man, volume, this looks really overextended, and you pull up your volume weighted average price, and it tells you that the price is way above that standard deviation line, it's going to come back down, it's going to contract, and the price is going to come down. So again, just something to note. Obviously, I know hindsight's 20/20, that doesn't matter and help us now, but future reference, try to look at that and identify that, because that's a really important factor, something I try to look at. So had I been looking at that around that time frame, I would have definitely had a sell signal going off. My trading senses would have been saying, hey, I need to trim my position, if nothing else. Okay, so that's kind of where we're at there. So okay, let's just go ahead and go back to big picture, right? And we're going to look at the retracement lines again and kind of see what's going on here, right? So let's see what the potential is here. So keep in mind, the price is trying to break through this resistance level here at about 560. It looks like it's having some trouble, which makes sense considering it again, it's overextended, right? So with it being overextended, is it going to break that line? It might, but it really shouldn't, right? Because if we look at this 4-hour TD sequential, we can see we're overextended. We're about 2 4-hour candlesticks into overtime, right? Now there's potential the price will go up. There's no doubt. With coins like this, they just keep going sometimes. But just bear in mind, the further it goes, the more likelihood it is come crashing back down. And when I say crashing, most of the time the retracement comes down at least to the 50% line, if not lower. So 50% line here, it would be all the way down to $2.18. Now, I don't think that's possible. I think that's way too low, just based on how well it's done and how well it's holding up, right? So if it were to retrace, I would say halfway down from where it's gone is probably more ideal. So I'd say like $3.68 is probably more likely a candidate for a strong support level if we were to lose $4.50, as well as not breaking the resistance of 553. Okay, so those are just kind of things we're going to look at. Now I'm going to take another look at this here again tomorrow. So we're going to kind of piece it together, for lack of better terms, because this is a small amount of data that we're going on, and we don't have a tremendous amount of history to really use. Because I mean, yes, you can see, and you look back here, that there's a lot of trading, right? These are the all-time highs. These are going to be support levels if it comes down to it. But with it taking off and cranking the way that it is right now, I think that's a very low probability of coming down to the $2 range or below. I don't think it's going to happen. I think we're going to probably see a transition where the price might average out between 370 and maybe 450 as a worst case, but we really just have to kind of wait it out and find out. But I can tell you right now, though, that all the technical indicators are telling us that we're overextended. There's a potential, a small potential for the price to run up again just a little bit further. But what's it worth, right? I mean, if you are so far into take profit target zone right now, why not consider trimming a little bit and add to your position when it comes back down? Now, granted, there's no guarantees it's going to come back down, right? We don't know that. But if your long-term picture is to hold on to this forever, then don't worry about it. Leave it alone. Dollar cost average, add to your position. But if you're just kind of a short-term swing trader and you're 5 or 10x right now, maybe take some of your profit out and just continue to let ride what you've made, what you've earned, right? Or take out your initial investment and then let the profit ride. There's a lot of different ways you can go about doing it, but what I'm getting at here is just, I don't think it's going to stay this high for this long. And there's definitely correction that's going to be due. The bill always comes due, if that makes any sense. So I just hope you can be cautious and be careful. I'm not telling you to sell your position. I'm just telling you to, maybe consider taking some profit. And then, of course, we can reevaluate again soon. Okay? Because a good trader will always consistently keep looking at things, setting alerts, setting reminders, and making sure that you know kind of what you want out of something. If you're just kind of letting it ride, you're gambling. And good traders have a good risk tolerance, so you should always know what you want out of this before you get into it. That's just kind of the bottom line. And I teach that to my patrons all the time too. So if you need a little bit more foundation, more guidance, check out my patron community, really awesome trading community, where we actually share signals for every single trade that I take, and also, of course, interact with all of my members, and it's a really awesome experience. So super happy about that. Definitely check that out in your own time. Of course, rates are increasing next month based on occupancy. That is my full-time job. This is my baby, and I'm more than happy to continue to help you become better traders. So thanks so much for your time. I hope you learned a little something here today, and we'll keep learning and growing together. Let's check this out again tomorrow. Have a great rest of your day. Thanks again for your time. We'll see you.